capture this to the cloud. We have a couple of folks joining in now, and we get a wider audience from Facebook, and we also pick up questions from Facebook as well. So in the very early days, we used to get a couple hundred folks joining this small business webinar. The very first one we did, and then the numbers have sort of gone down. But I think there is still a need, and people are watching the videos. So we capture the videos, we post it on YouTube, and then we also archive it on the website. So people are picking up these videos to watch them and perhaps go through some of the Q&A, because a lot of people had some very specific questions in the prior discussions we had, and so hopefully we can do some of that today as well. So it's a delight, Neeraj, to see you. You and I used to bump into each other at the cafeteria building where I used to head down from my office building, and it was always a pleasure to see you. How are things going with you, Neeraj?
Things are going good. At least we are okay, but I just feel bad for the cafeteria, because people like them, they are really hurting at this time.
Yes.
They are the ones most affected.
Yes, interestingly, I just have to look at my phone, because I got a message today from one of my good friends, and she is basically, she has a clinic that she runs, and unfortunately she was diagnosed with coronavirus.
Oh my.
And so the clinic was basically on hold. Obviously you cannot run the clinic.
Right.
And then the bill started mounting up. And the landlord is breathing down her neck. And so she reached out today that, hey, I need your help. And I have no idea, but I promised her one thing, that, look, I'm going to do my best to help you out, because that's really what we need to do. That's the call of the hour.
Right.
We need to jump in and engage. And if you look at, Neeraj, the kind of questions that came to us was, somebody was asking me about motel vouchers, because they were losing their home, and they were looking at getting these state of California motel vouchers, and at least leveraging that option. And then somebody reached out, small business issues. People are reaching out with lots of different issues that they are going through. And
so
all I can do is
motel vouchers?
Oh, homeless folks in California.
Okay, so they can go and eat somewhere.
No. Actually, for basically.
Well, they can stay there.
You can stay there, yeah.
Oh, yes, that's. Yeah, because otherwise these motels are empty. I think so. The city or the state is going to pay for those.
Yes, it's a state-funded program.
Oh, that's good, actually.
And so actually, let me just quickly show you then. I think this will be useful, because we have been actively engaged with this coronavirus, and essentially we have taken some time to create some very compelling data points that people can go and look at. And so let me just quickly share my screen. Okay, so, and this is a coronavirus landing page we have. And so we rolled this out. It's in the 7th week, and we have a few hundred volunteers who signed up with the neighborhood pandemic preparedness. And yesterday we got a request for groceries from Mountain View. So we are actively helping seniors, like, hey, if you need help with groceries, medication, please shelter in place. Let us know how we can help. And we got a request from Mountain View yesterday, and we found one of our volunteers who lives in Mountain View. We connected them, and the person called up the senior, and they are taking care of it. And there are many examples of that. We started this effort like 7 weeks back, and now I just came back from the Valley Medical Foundation, dropping off a big number of masks there, And I was checking with them, do you still need masks? And the answer was, yes, of course, please keep providing us these masks. And they are offering them to the healthcare professionals who work there, including nurses, doctors, everybody. They're picking up those masks, and they're putting them to use. In fact, what they told me was they're also washing these masks and reusing them. So.
Oh, that's good.
But they need
all the masks, are we getting FDA, or now there's a leniency in whatever mask we can get at this time?
I think for lack of anything else, even the masks that folks are making at their homes, essentially what we do, Neeraj, is we provide the fabric, We provide the elastic that is needed. And plus we have training videos that we have people look at to start. So as long as you have a sewing machine at home, you can make some pretty nice masks. And we actually conducted a training session as well. So, and what they do with these masks is you can just wear them like at the hospital, but they also use it as a layer between the N95 masks, and that increases the longevity of.
Then they can be reused. That's a very good idea, actually.
Yeah, so they are using it in variety of different ways. And my team, basically, they were asking me, Rishi, till when do we need to continue? They thought that, okay, we are probably going to sunset this program. I said, no, I mean, there's still
actually starting now. When the economy opens up, I think there will be more and more need now.
Yeah, exactly. So this is our the newsletter, which is on this website. Look at this. This was updated just today. Yesterday, 4/28. And if you look at the sections it has, we have a highlight section, do's and don'ts. We have a financial assistance for low-income residents by COVID-19, unemployment help, questions on housing, homelessness, and they're all hyperlinked. So we can just click on this and we can get access to that data. Yeah. And then we have a senior section, we have the family fund, but here is a small business section. And lots of resources here that provide answers. And so this is our 7th small business webinar. And I know, Neeraj, you and I were trying to get this set up a while back, but I'm glad we are here today. And so I think some of the latest stuff that we are hearing is with respect to how we are sort of going to allow construction, landscaping, some outdoor activities under the new shelter-in-place order. So we are obviously have a shelter-in-place order until end of May, but we are going to start relaxing. And today, Governor Newsom was on talking a little bit about that in a live press conference. And so the new rules are going to take effect on Monday when the current order expires, basically. So this is going to be enforced starting Monday. And some of the counties, Alameda, Contra Costa, Santa Clara, San Francisco, Marin counties. Interestingly, the number of cases day to day, it hasn't quite subsided. I think we are at the top of the bell curve. I don't know what side we are. Either we are dropping or we are still climbing. It's hard to tell right now, but we can see the bell curve. And in San Francisco, the day-to-day, there's one data I looked at, and the number of cases actually went up higher from one day to the next. So it's still, I'm not sure if you're doing the right thing, but I guess many of the states across the country are opening it up now because people can't wait anymore. And especially the ones who are disadvantaged, who don't have an income, are suffering the most. And that's the reason why we are sort of looking at different options now. And it's going to be a phased approach of easing, getting the economy open over time. And like Governor Newsom said today, we are in a period of transition of modification, and we can undo our progress in a very short period of time, is what he's saying.
Right.
About easing the stay-at-home orders. So, it's this is where we are. And then we also see that when last week, $484 billion was passed as phase 3.5. And somehow in my head, when I was talking to Neeraj, I thought it was phase 4. With phase 3, we did about $450 billion. And we ran out of that money very quickly. And there was so much excitement. I had some friends here in Saratoga who own businesses, and they were out there applying. And they actually got the money very quickly. I think they got it like within a week, and they were pleasantly surprised that they did get the money. And but I think there are still a lot of businesses left behind. Like in phase 3, some of the big businesses that should not have applied got the funding, and now the feds are asking that money back. Like, hey, please give us the money back. And also, I hear that any company that got funded more than $2 million is now going to be audited based upon how they are spending that. So you have to use it for PPP is about payroll. So please make sure you use it for payroll purposes. Otherwise, I think the feds will be intervening and talking to you in terms of how exactly you're planning to use this fund. So when we look at the $484 billion, this is the phase 3.5 relief bill. So it's a total of, I would say, almost, we are nearing about $3 trillion of stimulus funding that has been pumped into the economy, and we need a lot more. And this one provides about hospitals about $75 billion. And it's looking to implement a nationwide virus testing program to facilitate reopening the economy. On our Healthcare Tuesdays, we have been talking about testing almost every week. And it doesn't seem like PCR testing or antibody testing is the way to go. So, I mean, it's not the end all be all. You know, I think it's still falling short of what we need to do. But I think we need to look at a variety of different options to see, you know, perhaps we can come up with a population segment that is less prone to get the virus, and we can get them out and about. So we have to look at different options because everybody is feeling very pressured to do something. So anyway, like enough of my talk. Neeraj, we are here to hear you talk about some of the stimulus package. I believe you have a presentation material, so let's run through that, and hopefully we'll have some questions as well as we go through it. So Neeraj, back to you. I mean, you are a brand name here in Silicon Valley. It's great to have you on this podcast, Small Business Wednesday. So let's. Would you like to share a deck, and you can get that going?
Yeah. Good evening, everyone. I hope everyone is staying safe at their home and taking all precautions, because that is very important at this time. So I mean, right now the webinars have become the best mode of communication and interacting. So and Rishi, you've been doing a great job, and I'm sure you've taken a break from your campaign and doing a lot of community work right now, which is really helping the people who are suffering quite a bit. So thanks for that. So I mean, I can start with the presentation. Let me just share my screen. 1 second. Are you seeing my screen?
Yes, yes.
Oh, yep. You are able. Okay, I thought.
Yes, yes. And if you don't mind, Neeraj, please hit the slideshow, and that way.
Yeah. Yeah. That's what I'm going to do. I just wanted to make sure that. Oh, where is it? Okay.
Yep, we can see it. Very nice.
Okay. First of all, I think we want to start with thanking all the people who have been at the forefront of this COVID-19, and because of them, it is we are able to sit at our comfort of our homes and have this presentation, because we cannot even imagine how the first responders or grocery clerk, healthcare workers, security staff, postal employees, first responders, janitorial staff, mechanics, and everyone, they are doing, and they are making sure all the essential supplies, essential care, essential services we are able to get sitting at home. So we wanted to thank them at the outset. This is a little bit of background. Our company is Bhatia & Company. We founded in California in the year 2000. And before that, I started Neeraj Bhatia & Company as a chartered accountant firm in Delhi in 1983. We are a full service accounting firm, and we have office in Santa Clara, Pleasanton, and New York and Delhi. And we also have an affiliate in Canada. And a little bit, this is a background about me. I am a chartered accountant from India, as CPA. I have also done cost and works accountancy in India, and I have a master's in international tax from Florida. And the rest is about my academic background and some of the achievements. Coming to the presentation, so as we all know, the biggest, one of the most talked about incentive everyone is getting is the recovery rebate for individuals, and a lot of people have already got. If some have not got, probably they need to, in some of the cases, they need to take some actions these would be basically some non-filers who are not filing, maybe some senior citizens who don't have taxable income. There are, IRS has given some tools for going online and updating it. And in many cases, if the kids are not included, they can include those. Basically, for the eligibility is for individuals from 75,000 to 99,000, where the phase out begins, and for married filings jointly up to from 150 to 198. So that is for getting 1,200 for single and 2,400 for married filing joint, plus another 500 for each child. So, and normally for those who are getting the social security income and basically, though they should be automatically be able to get social security and the railroad retirement funds. So, and it's given to anybody who has a social security number. So basically, I think those H1 dependents who do not have social security yet, they may not be eligible for this. And even the children, if they don't have social security, will not be entitled to this. The only exception is spouses of military members and some adopted children. So coupled with, as I mentioned, there are some tools which those who have not got, or many of those who have not given updated their bank information, they can go online to the IRS website, use certain tools which are provided, provide the bank account information, and they should be able to get the benefit if they haven't got it so far. One of the relief which IRS has provided is filing dates have been extended, and payment of estimated tax due dates have also been extended. So as we all know, 15th April was for individuals. So that was extended to 15th July. And then later on, they have extended for non-profit entities, which was 15th May, or any fiscal year entities like C corporations, if they use March, May, or June year end. Then it will be beyond 15th July. So that is, and also any payment of estimated tax for the first and second quarter, they have been extended. So basically by 15th October now, everyone has to pay the first 3 quarters of estimated tax. So that's a big relief when cash becomes a crunch at this time. So, and if anybody wants an extension beyond July 15th, of course, they can file an extension with the forms 4868 for individuals and 700 for businesses. One of the other relief is extension of the 1031 exchange and investment in opportunity zone timelines. Basically, if somebody does an 1031 exchange, they have 45 days to identify the property, and 180 days for making the investment in the buying the new property. But if those 45 days or 180 days falls after April 1, so that period has been deferred till July 15th. So those will be those have to be done after July 15th then. So that deadline has been extended in both the cases. Now, one of the major advantage given is for withdrawal from retirement plans. As we know, everyone is facing cash crunch at this time. So this is one area where the IRS, the federal government is providing relief. Basically, up to 100,000 can be withdrawn from a retirement account without paying any tax. At this point, there will be no penalty on this. And no penalty for early withdrawal. Otherwise, normally you have a 10% federal withdrawal penalty on this. And state has 2.5%, but state has not announced as yet, but most likely they'll be following the federal filings for the penalty purposes, and giving the relief. This somehow has a tax element to this. So 100,000 withdrawal will have tax consequence, but this can be avoided if this is repaid in the next 3 years. So 1/3 of that amount, if it is paid in 2000, within 3 years of the withdrawal, if it is paid back, then one can avoid the penalty, avoid the tax also. Penalty is obviously not there. So basically in 2021 and 2022 and 2023, if 1/3 each is deposited within 1 year, 2 years, 3 years of withdrawal, there will be no tax also. Then if somebody has to withdraw from 401k or other retirement account, then normally the limit is 50,000. That has been raised to 100,000. So that's another relief which gives immediate cash. For those who are forced to withdraw because of the age, normally beyond 17 and a half, people have to take required minimum distribution. So this year they have relaxed so that they don't, if they don't want to withdraw, they need not withdraw this year without incurring penalty. Charitable, because everyone, a lot of charitable organizations are there and a lot of charity work is there. So they have, one good thing they have done is for those who do not itemize, for them also they have given above the line deduction of $300, which was not there earlier. Obviously, this applies only to those who do not itemize. For those who itemize, the deduction stays. But for them, what they have done is there was a upper limit of 50% of the amount of AGI up to which deduction could be claimed. For this year, they have removed that deduction. So if somebody gets an income of 100,000 and he puts entire 100,000 into for charity purposes, he'll get a full deduction, which was earlier up to limited to 50,000. And for corporations, there was a 10% threshold, which has been raised to 25%. Employers can defer payment of payroll taxes to the extent of the employer portion of the FICA, that's Social Security tax, which is 6.2%. And they can defer this amount and pay it in two halves, two installments, one before the end of 2021 and the other before December 22. And for self-employed individuals also can defer the paying of the 6.2%, which is the employer part of the Social Security tax. And for corporations and even for individuals, there have been some modifications done in the net operating loss rules, which can give an immediate cash benefit also for many. For normally, after the Jobs Act, the carryback of losses for businesses was removed. So, but now with the CARES Act, it has been brought back for the year 2018, for the 18, 19, 20 for the companies. And anybody who has losses in these years can take back and carry back for 5 years. And basically, and then get a cash back, file an amended return and get a cash refund. So which can be quite attractive, especially with the corporate rate in those days at the highest level was 39%. Now the C Corp rate is 21%. So carry back may be a big advantage, plus gives immediate cash for many businesses. Because then particularly in 2020, many may have losses with the way the situation is. It'll be good to carry back if they had profit in, let's say, 2016 or 2015 or 2018. They can carry back and claim those losses. So that's a huge advantage for a lot of businesses. Similarly, for individuals, there was a limit on the amount of losses which they could claim, brought forward losses, which was 250,000 for individuals, single individuals, and 500,000 for joint filers. This threshold has been removed for this year and suspended for 2018, 19, 20. So basically one can amend the prior year returns and claim these carryback of losses for 18, 19 also. So if somebody had losses in 2017 and a profit in 18, they may have paid taxes. So they can file an amended return and get back refund for those years. And I actually probably didn't mention for this corporations also, there was a threshold of 80% after the Job Act. So after these changes for 18, 19, 20, they have removed that 80% threshold also. So now they can claim for 19 and 20, they can claim full 100% of losses without that 80% threshold. Then there is for the businesses, there's a limit of 30% of the interest which they can claim on their of the amount of 30% interest which they pay on their loans, 30% of the taxable income, which has been increased to 50%. So quite a few businesses can benefit from this. For partnerships, there is a bit of calculation to be done. It's only for 2020, but there's a calculation for 2019 to be done. Half of it is allowed in 2020 and all that. So, I mean, if there are specific questions, we can look into that, but I'll just skip those details for this presentation. For AMT credits were AMT credit for AMT has been removed for corporation by the Jobs Act, but the past AMT credits, now any business which has remaining AMT credits can claim for 2018 return and 19 returns. They can amend 18 if it is filed and again get immediate cash based on this. There is one more interesting benefit which is there is employee retention credit. This is a refundable payroll tax credit for affected employers. Basic employers who are, this is so that they can retain the employees and keep paying them salary. The amount is up to wages of 10,000, 50% of the wages are considered for a refund. So basically up to 5,000 per employee, one can claim a rebate. This cannot be combined with payroll protection, but this can be a very good alternative to payroll protection also. I can once I do the payroll protection, we talk about that, then I can do a little bit of comparison of this also. So this is eligible for those businesses who are fully or partially suspended, or the family is facing any COVID-19 situation. And basically for employers who have less than 100 employees, they can get for the entire payroll, whatever they're paying. But for where the employers have more than 100 employees, then it is limited to those wages for those employees who are who did not work during this affected period. Now, one more a minor relief, but some of the individuals can claim that their employers can pay for their or their dependents' student loan obligation up to 5,250 during this year, and it will not be taxable, and it will, they can also claim a deduction. And normally it is only for education expenses, but for this year they are giving for past student loan also, which is repaid. The CARES Act also will not, if any loan is forgiven under any of the programs, that loan forgiveness will not be taxable. Normally, any credit card debt which is cancelled or any loan which is cancelled, it becomes a taxable event. So in this year, they will any of the forgiven loans under a PPP program or any other program it will not be a taxable event. Another interesting change which was done, it is basically a correction of a sort of lacuna which was left in the Jobs Act, was qualified improvement property. If somebody spends for improvement of any commercial property for improvement, now they will give 100% depreciation on that. And this has been done for 2018 and 19, basically for past years. So businesses can go back, amend the returns of 18 and 19, claim the 100% depreciation, which can, for many motels and others, it can be a good cash advance. It's under federal unemployment compensation, and additional 600 is being given by federal government over and above the state unemployment benefit, which one can claim. Now, California is also giving some benefits. They have extended till 15 July all the tax return filings, and also all the tax return payments for basically 2019 returns, payments or estimated payments, or even LLC taxes or non-wage withholding payments. State has even filing of appeals or protest if the deadline is there. They are likewise extended till July 15th. EDD has provided a 60-day relief. So any payments which businesses have to do for EDD, they can be deferred till 60 days during the COVID-19 period. So that's a huge advantage, can give some cash advantage to the businesses because any payment for the state taxes, they don't have to deposit for 60 days. California has its own disaster loan guarantee program also for 1 to 750. I will not go into the detail as of now. So now we'll come to the two major loan programs which are there. One is the payroll protection program, and the other is economic injury disaster loan program, EID. So under the payroll protection, which we have been hearing a lot these days, basically the employers This is a loan designed to provide immediate cash to businesses so that they can keep their employees and other expenses such as healthcare, premium, rent, mortgage obligations, and utilities. And SBA will ultimately forgive these loans if conditions are met, which means basically within 8 months, proper disbursement is done mainly towards the payroll and up to 25% towards payroll and rent and mortgage obligations and utilities. This is basically for employees, businesses with less than 500 employees, and there are some rules regarding affiliate entities. The affiliate also counts towards 500 employees, but there are some exemptions given for some hotels, some other, and those who already fall under SBA statutory or regulatory definition, they are also exempt. And basically, one application can be done per borrower. But that does not mean that if one person is owner of 5 entities which are affiliate, so long as the combined strength is below 500, they can all employ. So if, let's say, I have one entity I'm owner which has 100 employees, second one has 50 employees, third has 25, I can apply for all the 3 entities and get 175. I think there was some confusion as regard the affiliate rule, whether one has to pick and choose one entity or we can apply for all of them. But the banks have been giving, and the restriction is one application per borrower. But in this case, the borrower is the entity. So basically, each of the entity individually can apply, and get all of them can apply and get the benefit under the program. Sole proprietorship, independent contractors, basically Schedule C filers also are eligible to apply. So they use their self-employment income in Schedule C and claim based on that. Partnerships and LLCs also claim based on the self-employment income which they report in K1. And plus, if they have employees, that also gets added to their self-employment income in both the cases. This program starts on April 3. And it's till June 30th, but as we all know, within a couple of weeks, the first tranche of the $349 billion got over, and now another 310 has been released, and that also may not last too much time. The upper limit is 10 million for an entity, and as she was pointing out, beyond 2 million now they are going to do an audit because. They have started looking much closely. They don't want large businesses to benefit. There are some clarifications which have come recently. Basically, for loan eligibility purposes, CARES Act has defined individuals employed on a full-time, part-time, or other basis. A borrower must therefore calculate the total number of employees, including part-time, when determining the employee headcount for the purpose of eligibility. For example, a borrower has 200 full-time and 50 part-time. They both count. But when it comes to loan forgiveness, what they are going to do is calculate an equivalent of a full-time employees. So it's a different way they will be looking at for the purpose of loan forgiveness. So more details will be coming because once that stage comes, because they are almost on a daily basis, we are seeing clarification and changes coming. Under the PPP program, application is made through the primary bank of the borrower. And all the employees, the threshold is they are counted up to a maximum of 100,000 per employee. Independent contractors do not count towards the payroll cost because they can themselves independently apply for as a self-employed. Seasonal business can use between February 15th and June 30th for towards their payroll cost, or even new businesses can use this as criteria. So most of the employees have been providing last year's payroll records, but they're also asking for their continuity as of 15th February. So this is what I was mentioning about the utilization. At least 75% has to be used for salary, wages, commission, tips, and employee benefit like vacation, parental, family leave, or sick leave. And up to 25 can be used for mortgage obligation, rent, under lease, or utilities. And the loan is for up to 2 years with a 1% rate of interest. And the way it is calculated is you get for 2.5 months of average payroll for most of the applicants are using 2019 payroll, but you can use an alternative method also, which is under SBA, where probably they can use from till the time when the loan is applied. Say, let's say April to March can be used, and up 10 million is the maximum. Lenders normally are verifying business operation as on 15. So they have now, as per the new guidelines, they are asking for payroll records from February 15th to 29. Also, recently, this has been added very recently. And obviously, you have employees, and they will verify average monthly payroll crossed through IRS form 941, 940, and state filings. Another requirement which has been published is basically one of them, Rishi mentioned, is that up to 2 million, anybody with more than 2 million, they are going to audit. And they want all borrowers, they have to assess their own economic need. It's like a self-certification they have to do, where they are certifying in good faith that the loan is necessary in view of the current level of business activity and liquidity needs of theirs. Without this money, it will be detrimental to their business. Lenders may rely on borrower certification. They will not do too much of audit or into this, but it becomes the onus is on the businesses themselves. The obligation is on the businesses themselves. And if any borrower has got excess money, which they think before these guidelines and clarifications came, they have advised to repay before May 7th, and it will not have any. It will not be viewed as a fraud or any inconsistency or violation of the terms of the program. No collateral is required for the program, no personal guarantee, no SBA fee, and no agent fee. This loan is forgivable provided certain conditions are met. All funds must be used within 8 weeks of disbursement. They are to cover approved cost. Employee numbers and compensation level have been maintained, but this is what I was mentioning. They are going to calculate the equivalent of the full-time employees now. So obviously more guidelines will be coming on this, and no more than 25% have to be used for non-payroll cost. And obviously at that time, bank is going to verify eligible expenses to determine the forgiveness of the loan. And whatever is not spent or whatever is not forgiven will still be owed. This is a 2-year loan. With 1% rate of interest. So whatever is not forgiven has to be repaid within 2 years. And there will be no prepayment penalty. If somebody has got cash and they want to return, businesses are welcome. These are some of the businesses who can't, who are not eligible, those who are suspended, debarred, or have SBA irregularity, or there are federal criminal commitments or criminal charges, felony, misdemeanor, and all. The second one is the economic injury disaster loan, which basically they have been giving an advance of $10,000. Now, initially they have announced 10,000 advance, but a lot of businesses have got 10,000, but we've been seeing some of our clients have been getting less amount. So the criteria, they've not really come out very clearly how they're determining it. But I had read that sometimes couple of 1 or 2 weeks back, they're going to probably give based on number of employees, maybe 1,000 per employee and something like that. But again, that also, there's no consistency on that. And after the second the tranche has come, they have yet to open the filing. The SBA has yet to open the filing. Till this evening, it was not open. So because they still have pending application from the first round, and they are probably going to take care of those first before they reopen. But up to $10,000 can be, they give economic injury disaster loan. Even self-employed persons, sole proprietorship, everyone is eligible. Any business less than 500 employees is eligible. These funds come directly from US Treasury. For EIDL, basically you apply to disasterloan.sba.gov. There's no cost to apply. So there are two parts. One is the advance, which is the immediate advance, which we were talking of 10,000. But if one wants a permanent loan, then they go through the SBA through a proper formal loan as a disaster loan. And then the maximum unsecured amount is up to 25,000. And obviously then you have to go through the entire criteria for the loan, SBA disaster loan. Which is not restricted to 10,000. 10,000 is just an advance. And some of the terms of the loans are that for now, if somebody has an existing loan, it will be deferred. And any business will qualify for this business so long as they can establish the disaster. Some of the terms which are these up to $2 million loans are there for interest rate for small businesses 3.75%, for non-profits 2.75%. Terms can be up to 30 years, and the eligibility is based on size, business, financial resources, and they can be used to pay fixed debts, payroll, accounts payable, and or any disaster related payments. Any small business, sole proprietorship, cooperatives, employee plans, or non-profits and other businesses can apply. Who can't apply for basically those who are in illegal activities, or where somebody is more than 60 days delinquent on child support, some agricultural enterprises, but because they have other ways to apply. So some of these are some of the businesses which are ineligible: state and some those who are into sexual activities and gambling activities and all. Obviously, they look at acceptable credit history and ability to repay the SBA loans. This loan cannot be used for basically reimbursement or repayment to the owners or shareholders, basically in the form of dividends or disbursement or withdrawals, or even for fixed assets, because again, for those there are different plans, or for repaying long-term debts and other loans. As a short term, if somebody is, there are one or two programs which are there for existing SBA borrowers. So they can get an express bridge loan up to 25,000 if somebody is already into the, has a current relationship with SBA. And also there's one, SBA has a debt relief where they can be, the repayment can be deferred for some time, both principal, interest and fee. They automatically pay from the program, and those can be deferred. So that's it. But let me come back to the PPP, which I mentioned. So a lot of people are applying for a PPP where because it gives 2.5 months of payroll for employee. But there is, as an alternative, there is one employee retention credit where the maximum amount is 5,000. So I've seen with many businesses, they are overlooking the second part. And to me, in fact, some of my clients who I've suggested the second one, the reason is where the employees are more in the lower salary range. Generally, in the Bay Area, the salaries are high, but when they're working on, let's say, in the restaurants or in support staff and all, then if generally if the salary is, let's say, the average, or if they're working on a part-time and they're actually getting, let's say, 18,000 a year, then the maximum, let's say, I'll give you an example. Let's say somebody is getting 18,000 a year as a salary, an employee. Now, under the payroll protection, they get up to, which is 18,000 comes to about 1,500 a month. So 2.5 months salary would be 3,750. That's the maximum for that employee somebody will get. But whereas under the employee retention credit, the business can get up to 5,000. Now, if there are more employees in that that range, employee retention credit may even be better. In that case, you don't even have to go to PPP. You don't have to apply. All you do is, when you pay your payroll taxes for the next month, next payroll, you reduce that amount and you get immediate cash indirectly. So you don't even have to apply to anybody. That's an automatic reduction and gives you immediate instant cash. Keep reducing from your payroll payment which you pay to IRS. So that's a very good one, especially when a lot of employees are in that salary range, wage rate. So we have one employee who was running a restaurant in New Jersey, and a lot of employees are basically getting a lot of part-time employees are there, and where in fact there the rate of wages are also not like Bay Area where the minimum is $15. So the amount comes to much less over there, and for them the payroll employee retention credit works much better than payroll protection. So likewise, there is another client of ours who had already applied, and then they realized that probably they can repay that and apply under the other program. So So this is what it is, and I would be open to any questions if somebody has. Thank you. Thank you for your patience in listening to me.
Fantastic.
Yeah.
Nicely done, Neeraj.
Yeah, thank you.
Great data points. And we have a few folks here. Are there questions? Malav has joined in. I see Kushi. So let's get on with the questions. We have Neeraj ready to pounce on these questions. You can just unmute yourself and please go ahead with your question. And while I check on Facebook, if there are any questions from Facebook.
Hey, I have a question. Thank you, Rina, for your presentation. The ERC, does it apply to a sole proprietorship or a partnership?
Right. So which one are you talking of? Which
the ERC, the Employee Retention Credit.
Yes.
Is it?
It's basically for employees. So it will be to retain your employees. Basically, that's where you can get. So employees are there up to 5,000 per employee. You can get for retaining employees.
But if you are a husband and a wife partnership,
yeah,
and you have a K1 or a Schedule C, can you apply for the ERC?
So so it depends on the income. Again, we can see which one is beneficial in that. What it will depend upon what is your Schedule C income which you have, because in payroll protection your Schedule C income can be claimed. Whatever is your employment, on which amount you're getting employment tax, you can claim those. So
is there a form you can file with the IRS and get the money to your account, or is it part of the payroll?
Payroll protection is through, you have to apply through your bank under the payroll protection plan. Your bank can help you with the filing, and through that you file with SBA.
Yeah, because the PPP is, you know, in most cases you're in the queue, and the banks, you're not sure if they are processing your PPP loan or what's happening.
Unfortunately, see, one of the thing is you can't apply for both the employee retention and payroll protection. It's it is either this or that. So unfortunately, what has happened is some of the bigger banks have got a flack because they are not, they've only helped bigger businesses, whereas some of the smaller banks have been very aggressive. In fact, I know of one bank, by 7th or 8th of April, they had already funded the businesses. And whereas if you see the numbers for Wells Fargo Bank and Bank of America, they have been pretty poor, and even now they have been they have not been very aggressive. In fact, now SBA is also actually encouraging smaller banks to do it. In fact, today they had an 8-hour window where they said only small banks can file the applications. So,
can you recommend a small bank here in the Bay Area?
We can, unfortunately, what has happened is everyone is so overwhelmed. I've talked to some banks, they said first we have to give priority to our own clients, our own customers, because some of them, and so, but I'm sure there will be quite a few. In SPA's site also there are links which are there. Maybe you can give a call. I can check and let you know if somebody.
Okay. What's your phone number again? 408-845?
9411.
Okay, good. Thank you.
Neeraj, this is Malav. I have a question.
Yeah.
So the employee retention credit, is it, let's say an employee makes $10,000 a year, then you can claim $5,000 out of that?
That's
or
correct.
Only the payroll portion of it?
No, 5,000, the entire salary portion. Yeah, 5,000.
For the entire salary?
Up to, yeah, 50% of that, up to 5,000.
Got it. And does it go starting from January or from today onwards?
It goes from March, I believe March 13. This is from, I think March 13th is the date cutoff for that.
Okay.
March 13, 2020.
Got it. And then
Till
how do
end of the
we
year, till end of the
claim
year.
that? How do we claim that? Through the payroll processor? Or?
Yes, through the payroll processor. So basically this amount can be claimed when whatever tax has to be deposited periodically with every payroll with the IRS, it can be reduced from there. So if you have, let's say, $10,000 for an employee, you can claim 5,000 straight from the amount due to IRS. So it will be due for others also. And if the amount of, you can even get a claim for refund also. Say, if the amount due to IRS is less than the amount you can claim, you can even ask for an advance refund of the excess amount.
Yeah, because that's what would happen, right? If you have somebody with $10,000 income, a part-time employee, the payroll tax would be probably $1,000.
Right. Yeah.
So what about the other four?
So it will be basically employee part, and the income tax deduction. All that will go into this. And there are other employees. Let's say you have multiple employees, and if you you have two choices. One, you can claim in the next period, because if the employee is going to be paid in the following periods also, you can claim that, or you can just apply it directly to the IRS for a refund of that amount.
Okay. All right. Thanks.
Good. Any other questions? Nothing from Facebook yet, and I'm monitoring it. How about anyone else who's joined in? Are there specific questions you have? So this video will upload it to YouTube, and if you go to our the coronavirus, or rather the reality check page we have, and let me just share that. So let's see. And so if you go to this, which is the reality check. So this is obviously our sign up page, but what we have below here is all the archives. So the lineup and video archives, and this video will be posted. And here is the tech section, coding, healthcare, college admission politics, and supporting your small business. So this video from today will be posted at this section. So if you would like to just quickly browse through and check out what Neeraj was saying, but obviously you can also email Neeraj. Neeraj, what's the best phone number, email to reach you?
Email can be, you can send on info@bhatiaco, BHATIACO.com. I can put the last slide again if you want.
Please do, go ahead.
Yeah, 1 second.
Okay, here we go. So please capture this one, take a picture, and please reach out to Neeraj if you have any questions. Our newsletter has a few resources. You can also look for information there. And Neeraj, thank you again for taking the time to join us today. Very informative, nicely done. And hopefully we'll get you back soon enough for our Small Business Wednesday. It's a pleasure to connect with you again.
Thanks, Rishi. Thanks to everyone for watching. Thank you.
Thank you.
All right, okay, everybody, enjoy the rest of the evening. Bye.